Good morning, snowflakes. Good morning, JMB. How you doing? Hey, Spiros. Hey, Vel. How you doing? I had a very good weekend. I don't know what I did for the weekend, but I had a very good weekend. It's nice and rainy over here, so we swapped. We swapped with London. London, there's the sun, rainy over here. How about you? How about you all? Hope you all had a good weekend. Hey, Elliot. How you doing? Thunder is a thunder coming. I think a thunderstorm is coming. We'll give it a couple of minutes before we get started. Let me know where are you joining from. If you're new to the session, hey Godju, how you doing? Keep the spirits high, that's for sure. Hey, it's a brand new week, a brand new month, so things can only get better. Hey, digital business, how you doing? Hey, BL, tomorrow is the 4th of July, so might be a little bit quiet tomorrow, but before the US session tomorrow, we do have some news, so I'll tell you more about that shortly. Let's see. Anyone had a good trade from last week? Um, the euro dollar did very well for us last week. So if you had a good trade last week, do share it. Do let me know. I was scalping. I was just scalping the Aussie dollar today. Quick went to the downside. Started rebound. Looking to sell it back down. Euro had a brief drop. Uh, Not looking at it now, but we'll look at it later. One more minute and we shall get going. Hey, Booba, how you doing? Gold selling for sure, yes. Started scalping since this morning, so yeah, just a little bit. Hey Nick, today how are you doing? Hey Rory, we'll get through which pair. So Rory asked which pairs we have interest in today. We'll get through that shortly. Looking at the majors first. Alrighty, so let's get started. Again, thank you all. Brand new week. We are in July now, 3rd of July. If you are new to the session, a big welcome to the session. If all the regulars, welcome back. This is the daily market analysis. We do this every day, 3 p.m. GMT plus 8, where I look at the fundamentals, look at the news, what has happened, what could happen coming up. We look at technicals in terms of where price is, where price could head towards. And then with all that combined, we look for some possible trade setups. All right. As usual, if you are new to the session, do drop a message, say hi, let me know where are you joining from. I'd love to find out. And for all the regulars, I know you guys are watching. Do drop a message, say hi, let me know that you're here. And as well, one more thing is, oh yeah, click that like, click the subscribe button, help me out. Let's get the algorithm working so that we get more people onto the views. All right, so that's all I asked for. Click that like, subscribe button. Let's get more people onto the session. And if you do have any questions at any point in time, please feel free to put it into the chat. Let me know. Any particular pairs you'd like me to look at, put it into the chat. Let me know as well. All right, good morning, AYJ. Good to have you with us. With all that quick disclaimer, any information contained on this webinar should not be construed as advised and is presented as educational material only. The contents of this webinar is not intended to be a recommendation to trade a financial product, so please do your own due diligence. This is not really a signal session. You shouldn't just blindly copy. It's really more sharing with you my own analysis, my thoughts and points of view about where prices is, where price could head towards. Okay, so please remember that your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. So the link is there. If you do have any questions after this session, the Discord link is there. Do click on the link, join the Discord channel server. It is free to join. It will be free to be as a member. All I ask is when you join the Discord channel, do share your trade ideas, any analysis that you come across or you develop. If you have any questions, ask away there. We have a lot of members, all willing and very happy to share and to help you with your trading journey. So let's get to it. Oh, haven't done this. Do this. I need one more chart open. Okay. So looking at the news, what we had last week on Friday. Okay, not a lot of news on Friday, but we did have the core PCE price index for the US being released at a 0.3%. It was 0.4, so it came out as expected, while Canadian GDP was lower than expected. It was a 0%, got revised slightly to 0.1, expected at 0.2, but came out stayed at 0%. Okay, so what we actually saw, paying more attention to the core PCE price index month to month for the US, did drop from 0.4 to 0.3%. Not a big drop, a steady decline there, a slightly steady decline there for the PCE price index, which resulted in, we can see here, the dollar index dropping, right? So we were looking at this thinking that it's going to break up and possibly trade towards the 103.75 level. It didn't. In fact, it actually did what we, the alternate view was that it would come back in and test this trend line area. So it actually came back in, reversed back from 103.50 back down into the 102.80 or 102.90 range before now recently looking like it's bouncing back up again. So that drop, right, at 8 p.m. GMT plus 8 coincided with this core PCE price index, with a 0.3% that's indicating that we're possibly looking at maybe, right, it's really not going to influence that much, but it's data supporting a view that the FOMC might not, or the US FOMC Fed Reserve might not have to hike rates as aggressively, or could slow down, could continue to hike, but slow down on the scale of further rate hikes. Okay, so that was the main thing from last week on Friday since the last time we spoke. On to today, we did have the Swiss CPI month to month being released, was 0.3, expected 0.2, came out at a 0.1%. So inflation month to month, inflation growth month to month for the Swiss also slowing down from 0.3 to a 0.1%. What you would notice here is looking at the US Swiss franc, still pushing to the upside, more still influenced by the volatility of the dollar index rather than based on the data that we see being released just half an hour before this session. Nothing much else. We do have a whole bunch of PMI numbers to be released for the Eurozone and for the UK. Manufacturing PMI for the Eurozone, final manufacturing PMI for the Eurozone, looking like it might stay at 43.6. All right. UK final manufacturing PMI at 430, looking to stay at 46.2. So not expecting big surprises here for the Eurozone or for the UK in terms of the PMI data. Right now, we do have a whole bunch of Spanish, Italian, French, German PMI numbers to be released, and you can see not a big surprise expected either. So I don't see these data going to influence prices significantly. We do have US ISM manufacturing PMI, again, a small increase, 46.9 to a 47.2, still in that contractionary phase. Why I say contractionary phase? It's still below 50, but if it does get released at 47.2, that's possibly going to scale up, or possibly going to show that manufacturing PMI is coming closer towards that expansionary phase. Okay, but overall, I think that it's still not going to change prices too much, especially with tomorrow, the US bank holiday, 4th of July, Independence Day in the US. I think that volatility today, liquidity and volatility today might be a little bit lower. Leading into the bank holiday tomorrow might be a super long weekend for the US, so it might be a bit slower today as well. The main thing is that for tomorrow, we do have at 12:30 p.m. GMT plus 8, the Aussie cash rate, right? Aussie cash rate is that the RBA, let me just check something. The RBA yesterday, last month, had a surprise rate hike, right? RBA last month took interest rates surprisingly from 3.85 up 25 basis points to 4.1%. Right, took it up to 4.1%, a rate hike not expected by the markets at all. What we actually saw was that on the Aussie front, on the 6th of June, where was it? Right about there. So June here, right? So surprise rate hike from the RBA saw the Aussie dollar push up beyond that, from the 6610 level up, and we saw a steady climb to the upside towards 0.69, right? So we saw a sustained move because, firstly, because of the rate hike, surprise rate hike from the RBA, citing that the inflation was still too high at 7%, not near the target of 2 to 3%. Surprise rate hike pushing the Aussie up, also because of that dollar weakness. Right now, Aussie shot up, came back down, trading at that almost 6650 level. The question is it going to come down like we were talking about on Friday, or could it just sit right here and push up? Especially if the RBA does surprise market again, right? Can't rule out that, although inflation right now is at the 5.8%, we can't rule out that the RBA might still surprise markets again with another rate hike of 25 basis points to take it to 4.35%. What you could look at, or what you could read, is this. Okay, so the link is there. I'll share it with you guys. So I did write something about whether the RBA could surprise with another rate hike. Analysis is all there. The link is there for you guys to find out more. This is in preparation for tomorrow's interest rate decision from the RBA. Okay, so the link is there. Do check that out. For now, I think that is possibly going to consolidate along that range. I am expecting, or putting in the thought, considering that we might see another rate hike from the RBA, possibly anticipating some upside move on the Aussie dollar. Okay, so that's the main things for now until tomorrow, and then until the next time we speak at 3 p.m. GMT plus 8 tomorrow. So with that, just checking. Good morning, Angel Case. How are you doing? Hey, Desiree. Good to see you. Looking forward to you joining us more regularly. Hey, Kelvin. How are you doing? Hi, Robbie. I'm new to Forex. I appreciate this, but I don't understand what percentage it's about. Can anyone please help? Which percentage are you talking about? Or more, or moral? Just let me know. Question here is, I have an account of 11K. In my opinion, what's a good leverage levels? What tips would you advise? I would say, if you're starting at $10,000, $11,000, a 1:100, most typically you get a 1:100 leverage from most brokers. You don't ever want to maximize on that leverage. I would say that you would use at a maximum a 2% risk on your profile, on your risk exposure. So keep it minimum. You can have the leverage available, but you don't have to use all of it, right? So just bear that in mind. With that, then Aslam asked, so hi Jimmy, how are you doing? Aslam asking if the euro yen would go back to 150 in the future. We'll talk about that shortly. Okay, so now looking at the dollar index here, we are into 113 Australian, yes. 3rd of July. All right, so what I would say about the dollar index here, it came down, it tested. I like how it tested this trend line, and we made it a little bit more accurate with that. Came down, tested this level, and bounced back up. And if we did this, oh, what a big storm. You can see that on that recent upward push, right, from that base of that trend line up towards that near-term high, the dollar actually retraced back down to that 61.8 level, which coincides with that trend line, consolidated and pushed back up. So right now, I'm still looking at that hawkish move, that bullish move on the dollar index, supported by this 61.8 level and the trend line here, right? These two factors supporting this push back up. At this point, I wouldn't think that, because we're talking about 4th of July, we're talking about liquidity being a little bit lower, volatility being a bit lower. I think that it's possibly going to come back up into this range and possibly hold at 103.50. Okay, so I'm looking at the dollar index trading up to 103.50 just as a near-term level, which is that recent high that we saw on Friday. Okay, so far so good. Let me know. I'm talking about those figures such as forecast, actual. Omoru, go check out my YouTube channel. Analysis, the fundamental analysis, explanations of how to do fundamental analysis is there. But just as a quick recap for everyone is that when we look at, in particular, the interest rate decision tomorrow, all right, so it was 4.1%, it's expected 4.1%. So looking at this, was 4.1, the expectation is 4.1. This is the interest that you get if you have money, not exactly money in the bank, but the interest rate set by the Reserve Bank. So if it does come out at 4.1, it's as expected, we might see the Aussie dollar push up a little bit. If it does have a hike, that means an increase in interest rates. You're getting more money for your money in the bank, then you're looking at higher demand for the Aussie dollar. We should see the Aussie dollar strengthen further. Okay, if it does drop, then theoretically we should see the Aussie dollar weaken, because you're gonna have lesser demand for the interest, or for the money in the bank, or for in terms of your borrowing rates. Okay, hope that makes sense to you, Omoro. And hi, Rhonda, how are you doing? Thank you, Aslam. Thank you for that. And good morning, Jamil. How are you doing? So that's the view for, let me take that away. That's the view for the dollar index. Let me just check a line here. That still makes sense. But I think that we could, as a near-term target, really just 103.50. Right, could very well get to 103.75, but I think generally I'm just looking for a directional bias on the dollar index. So far, we look like it might be pushing to the upside. Okay, cool. So with that, then looking at the other pairs, Kiwi dollar, right? So we were looking at this last week, looking for it to break down and turn down to that 0.6036 level. It didn't happen. It came very close, didn't have a strong break below, and bounced back up. I'll take that away. Right now, looking like it's pushing back down. Remember, we're looking at a bullish or slightly bullish dollar in the near term. So I do anticipate that we could be looking for this to break this resistance turned support level. Right, 6127 or 6130, looking for it to break. If it does break, then we could see it trade down. Take this line away to, I don't think it'll come all the way down, because look, we're not looking for a very big move on the dollar. So I don't think it'd be reasonable to say that, we could sell down from 6120 or 6115. 40 pips. I don't think it'll go all the way like 70, 80 pips to the downside. No big reason why. At the most, maybe 60 pips. And the stop loss can be quite tight here because it's breaking a support level. Keep your stop quite tight, maybe even 20 pips. 25 at the maximum, I would say 20 to 25 pips would be reasonable. Okay, and you notice here as well, we saw that big push, a little bit of a shoulder, head, and shoulder action there. Inverted head and shoulder, that's why we saw that big push to the upside. Now looking like it's retracing. Right, and if I extended this right across, you see this trend line as well. So I like this. I really like this on the Kiwi dollar. 6115, stop loss 25 pips, take profit about 60 pips. You could be looking to close out a little bit earlier as well if you were managing that trade. So you see 61.8 is right at the neckline there. So I think, sell it down, watch it as it comes close to that 6090 level. If it breaks, then you can possibly see it continue down to that 6050 level. Makes sense so far on the Kiwi dollar. So I'll be looking to sell this down 6115, 25 to 60. 0.6115. Stop loss 25. Take profit about 60 pips. Buba's asking, what do you expect from the Aussie when the interest rate comes out as expected? Okay, so we'll look at the Aussie dollar now, right? Aussie dollar, okay, pushing down again. So what I'm seeing is a bit of a double top, very brief double top, right at that 6666 level. Looking like it's pushing back down. So very similar to the Kiwi dollar view, I would say that I'm looking for it to break this resistance turn support at 6630. And only if it breaks, no, in fact, I'll tell you what, Aussie dollar stay out for now. Okay, because we do have the interest rate decision to be had tomorrow. It's somewhat broken this trend line, so I'll take it away. And if you look at this, we could be looking for it to come. This is broken already, so I'll take that away. 61.8 is done. We can take that away. Okay, so what we're looking at is that it could come down to this point, and this is why I would say not worth jumping into a trade on the Aussie, because if you were looking to sell down at 66, for example 6635, maximum you'll be looking at is about a 35 pip take profit. The stop loss reasonably should be about 40 pips. Not really worth the risk on the Aussie. Better to be looking at selling the Kiwi down rather than trying to catch it on the Aussie, especially with the news due tomorrow. So you wouldn't want to be caught on the interest rate decision exactly. So what I would say is that if you read this analysis, right, I wrote it as it was at this point there. This is on H4 time frame. As a revision, I would say that we could be looking for the Aussie to come down, right? Not worth trading it down, but watch it come down to that near-term support of 65 or 66. Let's write one pip up. 6600 test, and ideally looking for a bounce to the upside. Okay, so this will be for the interest rate decision tomorrow. If they do hike rates, then we could be looking for a bounce. Buba's question is, what if they don't do anything? I think that then we're possibly going to see it sit right across, and it all depends on what the dollar index is going to do. I think that we might see it bounce, but might not be such a big bounce. Okay, so my view here on the Aussie would be a buying opportunity, especially if it does come down, a buying opportunity 6615, just to be a bit safer. Take profit, 60 pips to the upside to that near-term high. Stop loss tight at about 25 pips, 20 pips. Only if they do hike rates, right? Only if the RBA does hike rates. So 6615, 60 pips, 25 pips stop loss tomorrow. That's fair. So 6615 looks like the same number. Okay. Buy, stop loss 25, take profit 60, right? Wait for RBA rates decision only on hike. Okay, so if there is no hike and we do see it come down to this level and there's a small bounce, I still wouldn't get into this trade because I don't think that if the RBA doesn't hike rates, then we're not likely to see a good 60 pip push to the upside. Might come up a little bit, but then might continue to the downside. Remember that we are looking at the Aussie still trending lower, All right, so only if we do see a surprise rate hike, then we're looking at a scenario that we saw here, right? That we're looking at a scenario that we saw here, pushing price to the upside. Okay, makes sense? Gold chart. We'll look at gold shortly. Hope I answered your question there, Buba, about the Aussie dollar. We'll get to Aslam's question about the Euro Yen shortly. Good. Should we be focused on the sell side? I wouldn't be too keen on the sell side for the Aussie. Big strong support here at 6555, about 6555. So it needs to break that level before we're going to see further downside. So might not be so keen on the Aussie to the downside. Then with that, looking at the US yen. All right, okay, so the Aussie, just then I was selling this down. I think I posted this into the group, into the Discord channel as it was forming up and started turning down. I had a quick scalp to the downside, got out of the trade, saw it bounce back up. I'm only looking to, for myself, scalp it down if it does close below these points of 6640. Okay, that scalping, this is on H1 time frame, totally different approach. So while I was looking at that, then I got really interested in the US yen. On Friday, we were looking for it to close up and break above, look for further upside. It's not happening. We're taking that away. That trade did not trigger. Okay, US yen right now at 144.73. All right, we're still looking for that dollar strength. We see this. We're still looking for that dollar strength to push the US yen to the upside. It does need to break above. I wouldn't do anything unless it breaks above 145. Right? I wouldn't do anything on the US yen unless it closes above 145. Then we could see further upside. So very similar to the view we had on Friday, I would say that 145.25, stop loss, maybe 30 pips, take profit could go up to 70 pips towards that 146 level. But I don't think that it's going to happen today or tomorrow. I think what might happen on the US yen is that it will trade up to 145, maybe look like breaking and consolidate along this range. Right? Why I think that is really because dollar index looking like it's pushing up, but unless it breaks above that previous high, I don't think we're going to see a big move on the US yen for now. Right? There is also a lot of speculation at this 145 level whether the Bank of Japan is going to step in and intervene. But I think there is a lot of counteractive selling pressures on the US yen at 145. So just be a lot more patient on the US yen. I do know that a lot of people are looking to get into trades right about that point. So because there is a lot of anticipation at 145, you might see more fake breaks, and that's going to catch you out. So that's why I'll be looking at 145.25, 30 pip stop loss, 70 pip take profit. 145.25, 30 pip stop loss, 70 pip take profit. Watch out, 146. Yep, that's fine. Now watch out for a different thing here. Watch out for fake breaks. Right? So don't rush. Don't feel like you have to rush into a trade. But the BOJ didn't make any notice that they will make a move in their last meeting. They didn't. Between last week, there was a lot of comments that they could intervene if volatility of the yen weakened too much, or they say they were monitoring FX rates. Typically, the Bank of Japan does not announce their interventions beforehand. And also, if they do announce it beforehand, it's not going to work as well. So it might come as a little bit of surprise to most when it does happen. Okay. Then on to the pound dollar. Right. So pound dollar, this was really interesting. On Friday, we were saying it's going to fluctuate along this 1.27 level, looking for a break or a retrace. Right, it broke up a little bit before coming back down. Right now, trading to the downside. Okay, so if you did get in on the upside there, would have hit a stop loss on the pound dollar. Okay, I did not get onto the pound dollar. I did get onto the euro dollar, so I didn't get onto both. Pound dollar right now trading back down. Right now at that 1.2670 level. I would say it's a little bit too far away. It's a little bit too far away from that resistance level to get into a trade right now. I think that it might retrace briefly before we see more downside. So what you could be looking for here on a pound, right? Remember that we're not seeing a lot of news apart from the final manufacturing PMI for the UK. So I think that pound dollar strength, we're expecting that dollar strength. We could see this push to the downside. What you'll be looking for is selling down. So 1.26, below 1.2650, stop loss 20 pips, take profit down to 40, back down to that 1.26 round number support level. Okay, like that. Yeah, okay. So pound dollar, I'll be looking for selling 1.26 for 1.2650, stop loss 20, take profit 40 pips to the downside. Not ready right now, but with the way it's moving, it's something that I think maybe the close of this hour, early into the next hour, could be a trade that we'll be looking at. All right. If you want to, get a live update, do make sure you join the Discord channel. If you are liking what you're hearing so far, do help me out. Click that like and subscribe button on YouTube, on TradingView, on Trading.live. Euro dollar, I did catch this. So we're looking for this, on Friday. We're saying could break to the downside or bounce off that 1.0850 level. Came down slightly, right? Didn't exactly clear too strongly, bounced back up. And I traded this back up to that 1.09. I think I closed out early at 1.0905. I closed out. So a little bit earlier there. Give me a second. Hey Robbie, how you doing? So if you did get onto the euro dollar, let me know. I know Robbie did the euro pound. How did you go on that, Robbie? Okay, so that happened, and right now the euro dollar is trading to the downside. Right, it hit that resistance and it's trading down right now at 1.0878. Don't do anything. It's right in the middle. We are coming to 20 minutes to the hour close. Looking at the Bollinger, it's right there. It looks like it's going to trade to the downside, but it's right in the middle of that support and resistance level. Good one, huh? Oh, so you sell it right now, Serene? Or did you sell it back there? Let me know, let me know. Okay, so with that, so type it in, let me know where you sold it at. Euro dollar, because it is between that support and resistance level, 1.0885, 1.08. Oh, you sold it down there. Wait. Sold it a little bit early. 0.0885. Okay, you sold it down to the support. That's fair. Okay, so right now I'm looking at the euro dollar. I think that if we do see the dollar index continue to push to the upside, and we don't see that, it's not making too much, there's no big influence on the PMI numbers, then I think we could see the euro dollar trade down to the support. Okay, what you should notice here is that if you were looking to sell this down, it's only a 30 pip move to the downside. It's only a 30 pip move to the downside. Possibly looking to scalp this down, not an H1 kind of trade. This would be a shorter term kind of trade. If you're not comfortable with scalping it down, then I would say let's see it come down to that support of 1.0850. Right, let's see what happens again. Very similar to what we spoke about on Friday. Right, so we saw it once bounce off, again test this level and bounced up. Right now I'm looking, if you're not already in a trade, I'll be looking for it to come down and see what happens at this support level. What I anticipate is that dollar strength is going to continue to the upside, so we're going to see the euro dollar come down. It looks like we might see a bit of a false break before maybe pushing back up. What you could be looking for is, okay, I think it's a similar situation that we saw on Friday. If it does break down 1.0835, stop loss 20 pips tight. Take profit 60, almost 60 pips to the downside. If it bounces, then you'd be looking at 1.0865. Take profit 40 pips. Stop loss tight at about 20 pips, 1:2 to the upside as well. Okay, so euro dollar looking to buy 1.0865, 20 to 45. 1.0865, 20 to 45. Right, this is a bounce of support, or we're looking to sell. It is on the downtrend. Good one, Spiros. It is trending to the downside, but why I'm a little bit concerned is this support seems to have held quite strong. So I'm just considering whether it's going to bounce again. Most likely we're going to see it break, but it could just trade within this range for the time being. Right, so 1.0835, stop loss 20, take profit about 6. 1.0835, stop loss 20, take profit 20. Okay, and that's a break of support. So it all depends on what happens to the euro dollar at that support level. Okay, and as Spiros was saying, if you look at this trend line here, we are looking at that downward push, right? A coinciding of that resistance with that trend line. That's why we see it pushing to the downside. I think this is the more likely scenario that it comes down and breaks. If it was any other day, I would say, could be looking to sell it down all the way. But I'm just planning for a little bit of a slowdown in the markets for tonight onto tomorrow, with the US dollar on a bit of a bank holiday as well. Okay, so that's that's the view on the euro dollar. That makes sense. On to the US Swiss franc, went up slightly, came back down. So if you did get into that, you'd have got stopped out. That's why I wouldn't do both the euro and the Swiss franc. There is a bit of a correlation. Always choose either one. In this case, I chose the euro on Friday. That's why we saw it trade to the upside. This one came down. Right now, US Swiss franc pushing back up. I would say don't do anything on the US Swiss franc because it needs to come up to this resistance level with this point here at 0.9016 providing a bit of an area on that resistance, right? So it becomes a whole resistance area. I'll be looking for it to trade up to that point. I think that it could trade up and sit there. It could trade up and sit there, very similar to what I think could happen to the dollar index. Trade up and sit along that range. Same with the US Swiss franc. Okay, so I think the US Swiss franc could trade up to that 9010 level and consolidate along that range. So I would say US Swiss franc would be a do nothing. Could trade up to 0.9010 and consolidate. I can spell consolidate. Consolidate. Alrighty. Okay. When you analyze the market situation, we are looking at individual pairs, getting an overall view of how the market is performing or likely to perform. the US CAD, right? We're looking at this as well. Friday going to fluctuate. It actually did a lot more fluctuation than expected. So I had a big spike, broke that support down to 1.3227. Just testing this level, it probably came down to that 38.2 level, right? It came down, tested 38.2 as a retracement level before bouncing back up. So again, dollar strength looking to push the US CAD to the upside. What you would notice is that I can't get to the euro pound. Let me get to that. Oh, I'll do the pound yen and euro yen as well. The Canadians are on a bank holiday today, right? Observance of Canada Day. So think that we could see this push up. I'll maintain this view on the US CAD, on the loonie. 1.3290, 20 pip stop loss, 55 pip take profit to the upside for the US CAD. 1.3290, 25, 55. I'll keep that view, being driven up by the dollar index. Okay, make sense? Yes, dollar is getting a little bit stronger. That's why we should see this push up. Then, now looking at the pound yen. Right, we were talking about this on Friday, did break up, went up to our resistance level before coming back down. That's a good 50 pip to the upside, 25 pip stop loss. Let me know if you did that trade. Right now, what you see is that it tested once and came back down. Tested twice, came back down. Tested thrice, and looks like it's coming back down. Remember that we are looking at the US yen possibly pushing to the upside, but the pound dollar trading lower. So I think pound dollar trading lower, dragging it down. We could see the pound yen trade back down, right? 183 as a support level. It's what I think is going to happen on the pound yen at this point is that because US yen is pushing up, pound dollar is coming down, there is that counteractive move so far. So I think that it's going to fluctuate between 183 and 183.80. It's going to be within this range. But if we do see the pound dollar drop more significantly, then pound yen could below 183 at about 183.86, 182.85. Stop loss 30 pips, take profit 70 pips. Looking for it to come down to test that support level again. So it's just going to fluctuate in this range. I think what's going to happen is it's going to do this and then break to the downside. So that's what I'll be looking for on the pound yen. Then onto the euro yen, right now at 157.43. Someone was asking, would it get to 150? Aslam, I don't. 150 is way far away. Right, 150 is that far away. The last time we got to 150 was about a month ago, half a month ago, right? About half a month ago. A lot needs to happen before I get to 150. Big intervention from the Bank of Japan. Euro dollar needs to continue dropping to get it to 150. It's currently at 157. Not ruling out that possibility, but a lot needs to happen before that. I would say that take these away. So we were looking for it to trade up. It did that quite nicely. You know, Euro yen is going to range between this level. It's going to continue ranging, right? So if we took this down to this point here, about that, just considering this levels, these levels, and that one there, 156.78, I think that we're going to see this as a wide range on the euro yen. No big directional push for now. 158 holding very strong as a resistance. So I think it's going to range between 156.80 and 158 for the interim. All right, it makes sense for you there in terms of the euro yen. Val saying I got the long on the pound yen and she was slightly lower than yours. Very nice. Right, so Val got into the pound yen to the upside. Good job. Now looking at it, whether it's going to break back down. Okay. Then onto the euro pound. Google was asking, I think the last time we spoke about this towards last week, Wednesday last week, we were looking for it to break up. It did that. Right now, consolidating along this 8590 level. Right, it's consolidating in this range right now. If the euro dollar drops, pound dollar drops, then it's likely it's going to continue consolidating within this range. Looking at the euro, still pushing to the downside. Pound dollar still pushing down. I would say that it's likely to consolidate. I would be looking for a breakout and only be looking to sell the euro pound down if it goes past 85. So the line is at 8573. I would only be looking to sell down if it goes past 8570. 85 below 8570. Stop loss 20 pips. Take profit 40 pips to the downside. Yep, that would make sense. But it is a very wide range. The euro pound is just in that wide range, and you see that it's not a lot of pips. It's right in the middle there, and it's out of that consolidation. There's not a lot of pips. Just be extra careful. I don't usually like trading the euro pound just because there's so many factors that could affect the pound dollar and the euro dollar, and sometimes or very often they do counteract each other when it comes down to the euro pound. Okay, so could be a very quick move. Might not go all 40 pips, might be even 30 pips at the most. And could be quite quick. Come down, test, and bounce back up. So be extra careful if you're trading the euro pound. Hey, Sebastio, how you doing? All right. So again, guys, remember if you are finding this useful, to help me out, click that like, subscribe button on YouTube, TradingView, and on trading.live as well. That would help massively. Then looking at gold. All right, gold this worked out very nicely. Inverted head and shoulder, broke that trend, broke that neckline, went up to our 1921 level before trading back down. Again, dollar index strengthening, right? Dollar index strengthening. So I'll be looking for this to trade down. Right, I'll be looking for this to trade down. I wouldn't do anything yet unless it breaks 1910. If it breaks 1910, then you could be looking for it to come down towards 1896. Okay, so we take these away, and it needs to break 1910 before we could see it come down as an immediate target of 1896. Okay, so below 1910 could trade down to 1896. Alrighty. Any further questions? As we come towards the end of the hour, do make sure, if you haven't already, click that link, join the Discord channel. Dollar index still pushing to the upside, looking like it's going to continue on the hour close. Oops. Kiwi dollar, right? Okay, hour close, right at that support. So not ready to sell yet. We are looking for it to break that support to sell down. Aussie dollar trading down, looking quite possible. Stay out for now, but we're looking for this as a tomorrow trade, looking for it to bounce. Looking for this turn down and then bounce back up. US yen, I told you, got to consolidate at 145. Not too exciting right now. Pound dollar, could fluctuating there, could break. Gonna wait a while. Euro dollar continuation. I do like this. I like this a lot. Come down to that support level. Swiss franc sitting there, very close to that resistance. And US CAD also very close to that resistance. So what you should notice here is that we do have a lot of the pairs very close to the resistance or that support level. It's going to take a little bit more for it to break. Might not be right now on this hour or right at the start of this hour, but it might take a bit of time for the move to develop. You see dollar index retracing a little bit, but we're looking for it to retrace before continuing to that 103.50 price level. Okay, so if it all makes sense to you, again, join the Discord channel, leave a comment, leave a thumbs up, leave a subscribe. If not, then I'll see you all tomorrow, GMT plus 8 at 3 p.m. for the market analysis for tomorrow. Trade well, trade safe, and I'll see ya. Bye-bye.